Hi, I'm Mike Coyle, and you're watching Inside Exploration. Today I'm here with Mark Selby, who is the Chairman and CEO of Canada Nickel Company, currently operating in Timmins, Ontario, on the Crawford Nickel Cobalt PGM project. Hey Mark, how are you?
Hey Mike, how are you?
I am excellent. You have been extremely busy since the last time we talked.
Oh yeah, no, for sure. There's been some, major milestones, and 2021 is off to a great start with this MOU that we just announced with Glencore.
Yeah, and I want to get to that. That's the primary reason why we're talking today. But you did a lot of different things over the last 2 months. So I kind of want to go back to where we left off last time. So you
Sure.
filed the metallurgy report,
Yep.
which was rather positive, and we'll get to that. You have two MOUs with First Nations groups, and you also announced another discovery in the North Zone of the Crawford Ultramafic complex. So
Yep.
let's go back to when you added a third drill and you started drilling on the North Zone, and talk to us a little bit about this new North Zone that you've highlighted.
Sure. So, in terms of the geology, we're the main Crawford zone, and then we have what we now call the West Zone. And then we've got our East Zone and North Zone. And the East and North Zone are basically the faulted off extension of what we had at initially drilled off at the main zone. And so, what was interesting with the North Zone, and we were keen to drill it for a while, is that it has not fully coincident, but the gravity low and the mag high that we like to focus in on, we're sitting, almost on top of each other. And so that's been a pretty good, indicator of good mineralization. And so, so we were pleasantly pleased, again, this deposit just keeps on giving. And so we are, very happy with the first set of drill results where, we hit, multi-hundred meter intersections of dunite. It's not, as we said in the release, it's not as high grade as what we've seen in the main zone, but again, it's a lot more, mineralized dunite, again, kilometer long, several hundred meters wide. And again, as we continue to build out this resource, it's that high grade core that's really going to help, build the scale of the project. And once the project's built, the operating cost of these large scale operations are very low, looking at less than $10 a ton. So you basically, if you've got a piece of rock with, 1 pound recoverable nickel, pays for the costs, roughly. And then, another pound is, if you've got 2 pounds, you're going to have a 50% operating margin. If you've got 3 pounds of recoverable nickel, you're going to have a 66% operating margin. So, all of these satellite deposits, are just going to help, support a very long life, very large scale operation going forward. So we've been very pleased, that our geophysical model, continues to hold up.
So you're drilling on the north, you've got the east, you've got the main zone, you've got the west. Is there any other satellites that you've identified through geophysics that you're looking to test within the CUC?
Within Crawford, no, those are the sort of four main areas at this point. And then obviously there's the option properties that, we flew the geophysics on in the fall. We've got the preliminary results there. We've got some very good targets, that we're going to be pursuing this winter. We're just waiting for a little more detailed geophysics reports back in terms of targeting, exactly where we're going to drill. Again, we're in the very fortunate position that, we literally have tens of square kilometers worth of targets to go after. So, where you put that first couple-inch drill hole within the tens of kilometers, it's important to get that right. One thing that I've been very proud of as we've gone through the whole exploration program is just how focused on adding value and not just adding empty tons for the sake, of adding empty tons. So we've drilled out the resource we have, for well less than penny a pound, and there's a lot of nickel deposits out there, that are, spending 10 to 50 times that to be able to add resource.
And to be clear, this North Zone is outside of the current known resource. So what the three drill rigs you have drilling right now are going to be aimed at filling out this shell and figuring out what you actually have in the North Zone over the winter?
Well, no, with the three rigs. So we've got one going on the one will be going through on the West Zone that's
Okay.
there. The other one's going to go through. There's a few bits we want to fill in on the main, and then go fill in the east. Again, we just did two small areas in the east zone. It was clear, that we didn't see the big high grade core that we have in the main zone. So we chose to allocate those meters in the first phase to focus on that high grade core of the main zone, but we're going to go back in. And I mean, it's literally, we've got nickel here and nickel there. We're pretty confident we've got nickel in the middle. So again, we're going to fill those in, with that one drill. And then the third drill, we're doing some holes in the north zone now, and then we'll use that drill to go off and start drilling the option properties over the winter here. So, yeah.
You know me, I'm excited about getting into those option properties. I know what you have at Crawford, so now I want to see what the rest of it is. On that front, you put out a really good metallurgical report. I think some people are still a little confused with the whole sulfide deposits and the percentages. So give us a little bit of clarification on why this is a positive report for Canada Nickel.
Yeah, no, it's always tough, 46 to 50% versus, 85 or 90% that you would see in a copper deposit. How is quote that good? But, the reality is, and the benchmark for these types of deposits is Dumont. That's 43% recovery life of mine from a, 0.26% average resource grade that goes through it. They get into the low 50s for the best 4 or 5 years. One thing to point out with that, I mean, what we needed to do to Dumont, because we didn't have that big, thick, high-grade core, is we get mining at more than 5 times the milling rate to be able to pick out some of those higher recovery, higher grade blocks early on. So with Crawford, with our much more consistent higher grade core, we'll be able to start mining at a much lower rate and be able to deliver decent recovery. So again, that 46% and 51% numbers, for sort of bookending some samples around our higher grade core grade, and that lower number being close to what our average grade is for the entire M&I 650 million ton resource. I was very, very happy with those numbers. Again, with Dumont, it took us several years to get the metallurgy found out. If you look at some of the other large low-grade sulfide deposits, they've been around since the 70s, and they've been doing metallurgical work, in some cases for decades. So, the fact 6 months in that we were able to deliver those kinds of recoveries to, again, good concentrate grades, is tremendous. And again, over the first 6 months of the year, we still have lots of optimization to go. So, expect to see some news flow with, some additional improvements here as we move forward.
On that note, you're doing lots of studies. Where are you at with the whole net zero carbon initiative that you have going?
Yeah, so again, one of the key things with getting those lock cycle tests done was, that was going to give us the chunk of concentrate and the chunk of tailings, that we need to be able to do that first stage of lab scale work. So, that's all gone to, Kingston Process Metallurgy in Kingston, who's going to be doing that work for us. And so, they have the experiment all lined up. Fortunately, with Christmas break, things had to go quiet, but they're going to get going on that, and again, it'll take several iterations to get it right, but we're confident that we should have some good news flow on that sometime before the end of the quarter.
So we've seen you sign 3 MOUs now, and we'll get to the Glencore one. Super excited about this, but again, I think it's important to highlight the agreement with the Waboon Tribal Council and the Tequah-Tagamu First Nations group. I think these are important aspects of any project to see it through. So talk to us about kind of that process of making those connections and getting this ironed out to get those agreements in place.
Yeah, no, for sure. I mean, this is something that, not nearly enough people pay attention to. If you want to build a real project, you have to have permission, from the local communities and the local First Nations whose land it is, that you're going to be setting up a mine on. And so, from our perspective, it was important to get that going, day one. And I was always proud of the fact that at RNC Minerals, when we did Dumont, we were able to permit, during a period where you look across Canada, a lot of large scale resource projects, really struggled to be able to get widespread community acceptance, and we were able to advance Dumont, with a very broad base of support in the community, and that's what we expect to be able to do in Timmins. One thing I've talked about Timmins is that again, that's a huge advantage for us is that location in an established mining community that has a long history of resource development. That's as good in my books as or even more important than finding the resource. And so, I've been pleasantly surprised, very thankful for, both Waban, which is the two specific First Nations are Matagami and Matachewan within the Waban Tribal Council, and then Tequatagamu Nation. The engagement from them, their willingness, to work together to create long-term value for both of us. So, the Tequatagamu MOU, again, they want to move beyond, typical traditional, what impact benefits agreement is, which is where, most projects, end up with. They're looking actually deploying their capital, into building a part of our project in an area in terms of, electricity distribution, that they want to have a much larger business in. So, the relationship with them has been fantastic. And it's great, that we're looking at this kind of a, business venture with them. We've got some other ones we're looking at as well. So stay tuned on that front as we move forward. And then Waban with Matagami and Matachewan, again, the relationship has got off to a great start. And we again look forward to be able to, advancing that very quickly. One thing I point people to is, look at the releases, and look at the comments there. Again, this is. Some releases come out and there's kind of the mandatory words that need to be in there. And then there's additional comments where you get a feeling of, okay, there's a relationship there where, both parties, are committed to making something work for both sides. And that, I think the comments, that are there, are really supportive, of that. So again, I'm looking forward to, working through that this year. And again, do something that's going to create a lot of value, for both First Nations communities.
So what's your relationship like with City Council and the Mayor of Timmins? Have you had lots of engagement with him? What's the feedback you're getting from the city?
No, again, on that front, I encourage people to go Google comments from Mayor Pirie. He's a former mining CEO. He understands, the value that mining, can bring to the table, and particularly responsible development of mining. So, there were some great stories in December and, over Christmas, where, again, very grateful for the very kind words he said about the project and the company in terms of, our approach, to delivering value for Timmins. So, again, this is, I'm very, very thankful that we found Crawford, so close to such a great community like Timmins, and on the, traditional territory of these First Nations groups. It's been a great process so far.
So on that note, we've just seen the government kind of give FCC an influx of cash to advance their cobalt refinery in Northern Ontario here. Do you think there's any government programs or anything that might be interested in pushing the Canada Nickel Crawford deposit forward?
Oh, again, no, I was great to see. It was great to see for First Cobalt and Trenton Mel to get that deal done. It's nice to see sort of a key piece of downstream processing infrastructure, get built in this country. In terms of provincial and federal support, both levels of government made it very clear, that they want Ontario to have a footprint in the as we move to electric vehicles, that they want Ontario to be an important player in that market and have the entire value chain in place. And they highlighted the fact that we do have the nickel, cobalt, and other key metals, in the province itself. And then we've got the auto plants, at the other end of the chain there. So, as we advance the project, we've already made connections with the various key ministries there. Again, I'm looking forward to, as our project, takes more shape, that will, get into those discussions, in much more detail. But again, given the level of support they gave for the auto plant, our a mine the size of ours with the project life that we expect for our project, it'll be interesting to see the size of contribution that's there, relative to what they did for the auto plant. But I'm expecting it to be significant.
That would be great to see them get involved in some way. I mean, we talked last time about that whole nickel triangle, Sudbury, Timmins, you got Dumont in Quebec. Now we have a cobalt refinery here in Northern Ontario. I mean, writing's on the wall there. Anyways, this memorandum of understanding with Glencore, this is huge. I've asked you, I think every time I've interviewed you, is there any interest from majors? Well, clearly they've been watching, they've been following, they see what's going on, and they've opened the doors for you to do some work. So talk to us about this agreement. This is huge.
Yeah, no, that's the key part is it's opening doors to do the work. They're a very busy company and they wouldn't bother opening the doors, to start these discussions. So, yeah, so the key thing here is, the thing with the great big mining project is comes with a great big, CapEx.
Hmm.
The ability to use, some of the excess capacity that they have at the Kid Creek concentrator to get started at a much smaller scale, at a fraction of the capital, to be able to get going faster because we don't have to go out of the gate building a great big mill,
Hmm.
is a tremendous leg up versus all of the other larger scale, nickel sulfide opportunities that are there. So, there's two key pieces of work that we're going to work together on over the coming quarter. So one is, just understanding, what would be involved in using some of that excess capacity at Kid Creek to be able to process some of our material. And then the second piece of it, is, our tailings. Have they've got a 50-year, they've been mining there for 50 years and they have a tailings facility there that they'll eventually have to remediate at some point,
Hmm.
and our tailings are slightly basic. And so there's an opportunity to be able, that our tailings would help them actually remediate their long-term tailings liability. So, that real synergy, again, in mining, you don't often get a lot of real synergy, in potential transactions. So, that we just need to do the additional work there to be able to do it. Again, given the amount of acid that we need to do, uh, when we're processing our material through,
Hmm.
I'm pretty sure it'll absorb some acid when we're looking at it, on their tailings. But we need to do that work, during the coming quarter. And again, if both of those things make sense for both of us, then we'll, get a definitive agreement in place. Obviously, the ability to start much more quickly at a much lower capital cost has a huge impact on the PEA. So we're
Yeah.
going to delay completing the PEA until the end of March, to be able to incorporate this option in there. So again, it's early days. It's a non-binding MOU, but again, they're a busy company. They wouldn't bother to choose to spend time with us if they didn't think our project had some potential. And again, from our side, the ability to be able to get started more quickly, and the real synergy around our tailings, is a tremendous transaction that I think will create, hopefully create a lot of value for both companies.
So if the testing all works out in your favor and it shows that this is going to drastically reduce the capex of the project,
Yeah.
this is just something to get you started, right? You still plan on building your own mill at some point in time to process your material.
Yes. Yeah. No. For the part with a large low grade deposit, you can't travel it. You can't move it too far. So we'll start with some higher grade material, and the concept right now is that we could continue to use that milling circuit for the higher value PGM, or higher PGM content nickel ore that we've got on a
Hmm.
long run basis. But in terms of when you're processing 50, 35, 50, 100,000 tons a day, you need that mill as close to the places where you're mining as possible. So yeah, so we'll still build the big mill. We'll just be able to get started on a much smaller scale first, while we're permitting the separate, much larger project, that we originally envisioned here going forward. So again, I think it'll be a real win-win. And then longer term, the other other sort of big piece of work is, we've always talked about having downstream processing plants nearby the project. The Met site itself used to have a copper refinery, a copper smelter, and a zinc refinery.
Hmm.
When the mine production output shrunk, they got rid of those processing plants. But again, the concrete pad is there, all the utilities are there. So
Hmm.
in terms of building a downstream processing plant, that site would have a lot of advantages. So that's sort of the third dimension of the work that we're going to be looking at to look at utilizing some of that site for our downstream processing.
So initially, I think I looked at this project as you were going to build it up, you're going to prove it out, and you're going to put it on the market for a major to come along and scoop it up as an asset. But the more I talk to you, the more I see the excitement in your expressions. I feel like you want to put this into production yourself. I mean, your experience is there to do it. So, I mean, where do you stand on that front?
Oh, I mean, we definitely, and I, have access to the people to be able to, being in the nickel industry for 20 plus years now,
Hmm.
is, we could put it into production again, and we will push it as hard as we can. I think, the reality is, nickel, given the focus on EVs and nickel as a really high growth metal. Again, one thing I'll point people to, if they haven't seen it, Glencore did a great investor presentation update in early December. And they projected what they saw, metals demand, to be, and they're looking at 9 million tons of nickel by 2050. Yeah. Versus 2.5 million tons today. That's 4% growth. That's the kind of numbers that I've used, in my presentation slides around where I see nickel growth. The reality is, if you look at a pile of other analyst forecasts, they're nowhere close to this, right? So again, Glencore sells a big portion of the world's, is a major seller of nickel. They're probably the mining company that has their sort of, the finger on the pulse of the consumer market, more than just about anybody. And if that's the kind of forecast that they're talking about over the long run, that's 6.5 million tons, more nickel annually by that time period. There's right now no visibility on anywhere near that amount of nickel, coming out of the ground. So, I think, as one of the few large scale projects outside of Indonesia, we're going to get a lot of big company interest here in the next few years as we advance the project. But we're just going to focus on what we can do, and we're going to sort of push in hard as fast as we can. Again, one of the big benefits of when you can start for a fraction of the capital cost, a lot more financing options open up for us to be able to do it on our own, and do it on our own where we retain a much larger portion of the project going forward. So, it's really, again, it's a non-binding MOU. So, nothing's cut in stone at this point in time. We still have a lot of work to do, but, in terms of the upside value, it's a really, really tremendous opportunity for us.
I kind of figured we'd find ourselves in this position given the fact that Glencore is kind of a leader in the battery metal space. They've kind of built themselves up to be integrated into it, and with First Cobalt Canada, now getting the cobalt refinery, everything, it's kind of falling into place. So it looks good. I'm excited for the project. So what do you plan on doing for the rest of the winter? I know you got 3 drill rigs. I know you plan on doing a lot of drilling. Are you going to finally step out into these areas that we've been talking about for a while?
Yeah, no. This winter, you'll see us drilling at least a couple of these option areas. Again, from the preliminary geophysics, there's some very interesting targets to go after. We've talked about it in some of our releases at the end of the year. So that'll be a big focus of work in terms of the metallurgy. Again, 6 months in, we've got a bunch of optimization to do, and that'll get done over the next 6 months. We still intend to deliver that feasibility study, by year end. Again, this Glencore opportunity with Kidd Creek is, basically, we're kind of calling it a phase 0 in front of the sort of phase 1, phase 2, phase 3 that we were originally looking at, with the larger project. So, we have to delay the PEA to incorporate that, but in terms of the overall project, it's not going to change the timing in terms of when we can get the feasibility study done. So, all through the year, we'll, get that mine design and to be able to support the smaller scale startup. And then just get work on getting the feasibility study, work. There's a bunch of various, pieces of work that we need to get done over the next 12 months on that front. It's not going to be particularly newsworthy, but between the exploration, between the met work, between the additional work, in terms of partnering and financing, that we'll be able to do once the PEA is out. I think it'll be a very, very exciting, 2021, and we're already off to a great start. And then again, we've got the whole net zero stream of work, that again, I think, we'll be in a position to come back to the market, with what I hope is some pretty interesting results, and hopefully the first net zero nickel cobalt, by the end of this first quarter.
And we could probably end it here, but I want to pick your brain on one last topic here. Mm-hmm. What do you think a Biden administration is going to mean for battery metals? We know he's very pro-green technologies. Do you think this is going to be a catalyst in our space? I mean, nickel's already at $8 a pound, which is fantastic for your upcoming PEA. But what's your view of the macro outlook on nickel right now for 2021?
Oh no, it's tremendously positive. When you look around the world, each of the world's major economies was really focused on a transition to, away from internal combustion engines. Europe, Japan, China, the rest of Asia, and so forth. And the U.S. was really sort of always the outlier. That there wasn't really any focus, or intensity in terms of being able to pursue that goal. With Biden in place and with Biden now in control of all three arms of government, I think you're going to see some big moves from the U.S. on this front. And so, we still have one of the world's global economies sort of heading in a different direction on something that sort of slows the momentum down. But when you have all of the global economies, effectively heading in the same direction on something, I think it's going to be pretty exciting, pretty exciting to watch, and again, I think, going back to Tesla's battery day, 3 terawatts of batteries, Tesla alone, is going to need 1 million to 1.5 million tons of nickel per year, conservatively, relative to the 2.5 million tons, which is the total market today. So, hopefully we'll be one of those suppliers to them in the near future. And again, all of the other major EV makers who are making, tens of billions of dollars of investment on that front to be able to deliver those vehicles to consumers who they think will want them, sometime during this decade.
I mean, Tesla's a big company and their demand's going to be high, but even companies like Ford are shifting to EV. There's a lot going right here in Ontario. I mean, they're going to have a huge demand themselves, along with other auto manufacturers.
Oh yeah, every major car company has got that, and then the tier one suppliers in terms of the battery components to them, are also, the scale of the investment in all of those chains. The thing that's interesting is there's a real disconnect between the scale of investment you've seen in the battery plants and the scale of investments, in the raw materials to provide those battery plants. So, I think, that people are going to realize, maybe we should deploy a little more capital to this part of the equation here if we want to make sure we can actually build all the EVs that we want to build in 5 to 10 years. So
the timing is perfect. And we'll leave it at that. Thanks, Mark. We'll catch up with you again after you get your PEA out, maybe sooner. The way you put out news, we'll probably be sitting down talking with you in the next couple of weeks.
Yeah, hopefully sooner. All right. Thanks, Mike. Take care.
Happy New Year, Mark.
Happy New Year.